All right, hold on, everyone. Just give me a second here. Let me just get my microphone situated. Okay, hold on. Yeah, we got a few things to talk about here. Just give me 1 second. Hold on 1 second. All right. Hey, everyone, thanks for joining me. This is Mark Principato, Mark P Markets, and thanks for joining me for another Bitcoin day trade setups analysis session. Okay, so if you're new to this stream, this is what I do. I look at Bitcoin on a 30-minute time frame, and then we go to a 5-minute time frame, and we're looking for trade setups. Okay, so I demonstrate how the day trade mentality works. Now, this is on paper. I'm not taking any real trades here. All right. I just want, it's a good learning exercise. That's what I have on this chart here. So we're going to start with our 30-minute chart. On the other side here, okay, on the left side of the screen, I have my daily chart. Okay. Now, while we're waiting for setups and while we're waiting for something to do in Bitcoin, we can use that time to explore other markets on the bigger picture, okay, which is usually what I do. And that's more appropriate for swing trades. So, so we're basically going through two types of mentalities here. And it may be confusing if you're a beginner because they really have nothing to do with each other. Okay. The day trade time frame is its own thing, and the swing trade time frame is completely something else. And it's important to make sure you understand the separation. Okay. Again, I would not recommend starting out as a day trader. I would not recommend that. It's extremely hard, and you have to have a good foundation. You have to have a good thought process and foundation in place before you can expect to get anywhere on the day trade time frame. That learning curve is steep, and it usually takes, assuming you have someone that can teach you properly, it takes 3 to 5 years. Okay, so not a good place to start. Swing trades, investing, bigger picture, much easier, much better use of your time, and much better way to control or at least manage your risk. Okay, and let the market work for you. It's much better, and it's just easier because you don't have the same competition. The competition is not the same. All right, so anyway, we're not going to get into all that right now. Let's get into what we have to talk about here. All right, so here, let me pull up my slide. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now, also really quick, if you're not familiar with my training program, you can go to markpremarkets.com. Everything that I talk about in this stream comes from that foundation. Okay, that's the basic foundation for technical analysis, and the goal is to be objective and to use as little information as possible. No one likes this idea because everyone likes complexity. It's human nature. I understand. I'm not trying to change human nature. I'm just trying to show you what I have found that works over the 20 plus years that I've been in this. You want to use the most valuable information possible because 99% of the garbage that's fed to us is useless. Okay, so please keep that in mind. No one likes that idea. Everyone likes to think that your broker is giving you some kind of valuable thing that's going to help you make money. No one is here to help you make money. They all make money on your fees, so they don't care about your outcome. Again, all right. Also, if you're not in my Discord community, there's a link in the description portion. Join it. There's a free area. There's a lot of valuable information in that free area. If you're interested in the Signal service, I put a link to that too. There's some packages. I do have some nice educational packages that are bundled with the Signal program, so you can get some nice savings on my training program if you're interested in something like that. Okay, again, the link is in the description. All right, so let me just say hello to a few people. We got Stian. All right, Bill, good to see you. Hey, Stacy. All right, one of my newer followers here. Alice. Okay, Kim. Hey, good to see you all. All right, so also I want to mention, Stian, that euro sucks. We may have to. I'm gonna see how we close today in that euro. Euro has been nothing but a problem. I think part of this euro situation has to do with cheaper oil. Right, oil just keeps sitting. It's sitting on that low, and it's looking really ugly. And that may be a positive for the euro. Either way, we're fighting a very optimistic situation. Okay, so if that thing closes bullish, or if I see it looks like we're getting the conflicting signal, I'm just going to get out. I'm just going to put the order to get out, right? And it may be like a 50 pip loss or something like that. But that's the stop I have on that one is 200 pips. I do not want to take a 200 pip loss on the euro. So I'll just get out, take a smaller loss, and we'll reevaluate, but I suspect this has something to do with oil. I could be wrong, but euro is obviously very sensitive to the oil situation, right? And look where oil is. So anyway, just wanted to mention that. All right, so we'll try to stick with that, see how it works out today. And we don't have any major economic news that's likely to affect the euro this week. I mean, just a couple of rate announcements, but they're not relative to the euro. So we have to see how that goes. All right. Anyway, all right. So just wanted to mention that. Let's now take a look at Bitcoin here on the 30-minute chart. So the purpose here is to now start gathering information for our day trade game plan. Okay. You cannot react to market movements. You have to have everything pre-thought out. And then if the market aligns, perhaps you have a trade. All right. Yes. Yesterday, that trade idea put out was actually worth something. After, of course, I had to close off the stream. I think that was back here. Was that over here? Where was that? Or where that might have been. I don't remember exactly where that was. Let me see. That was around 10 a.m. yesterday. That had to be around here somewhere. Was it over here? Maybe it was over there. I can't remember. Anyway, that thing was worth something. I lowered my stop loss. Okay. Yeah. So I may just get out of that thing because, again, this thing, like I just explained. All right. So let's talk about Bitcoin. As you can see here, all these lines on my charts, right? These lines, these levels, these are from previous analyses that I've done here on this stream because I leave the levels on the chart. And then look how price reacts to them in the future, right? These lines were drawn previously, and the market shows their relevance, all right? How people are behaving, how participants are behaving around these levels. So I don't have to do a lot of work there because the levels are still relevant. Look at this outside bar that's developing right now. This is a 30-minute chart. It rejected this resistance, which was a support, okay? It blew through the support. What time was that? Like at 2 a.m. or whatever, for whatever reason. I don't care why this took place, but it took place. This right here proves, of course, that you can't step in front of these levels because it just blew right through it, okay? So it found support at the next level that we had predetermined. And look, since then, it found support twice off of that level. See the higher low, and it went straight to the resistance and rejected. Okay, fine. Again, these are 30-minute bars. Now, with that information in mind, also the structure, the general structure is bearish, okay? Look, this is basically a lower high relative to this high way back here, okay? Lower high, possible lower high developing, lower low is likely to follow. That is our general expectation for the day. Lower low can follow. It's within the structure to follow. Doesn't mean that it will, but that means that if we take a short, we should be more open to the short, and we should be a little more expectant of the short, okay, as opposed to going long. Now, it doesn't mean longs are out of the question. It just means we should expect less from longs. Longs are going to be more aggressive. Again, I'm talking from the day trade time frame. This is not to be confused with any other time frame. So don't look at your daily chart and be like, oh, yeah, okay, that means this, and then try to apply it to your day trade time frame. The time frames are going to be very confusing. Stick to the day trade time frame, right, for day trades. Now, so with that being said, I'm thinking about shorts, right? That's what I'm interested in. We have a possible lower high. We have a bearish outside bar developing. This candle closes in 12 minutes. We close like that. We have basically a sell signal on the 30-minute chart, okay? Now, of course, as you know, I'm not taking trades on the 30-minute chart. I'm taking trades on the 5-minute chart. So what does the 5-minute chart look like? We're going to switch to the perp chart here in a moment. I just want to see what this looks like with the levels that I have drawn on my chart, right? Look at this nice sell signal. Bearish pin bar, okay? Rejecting resistance. I mean, that was pretty clear. Of course, we see this now after the fact, and look how nice that follow through is. Okay, that's what a short should look like. That's what the euro should look like. Anyway, so with that, there's nothing for me to do here. I'm not going to mistake this. This area is a possible support because there was a previous resistance. But as you guys know, this is basically, that area is basically at the midpoint of this entire price series, if you want to call it that, right? I mean, look, it's in the, if I draw a rectangle from the low to the high and I draw a line, we're basically at the midpoint, basically, right? If I draw a line across these highs, it's the midpoint. So not the best location for taking positions is what that means. It's very random. It's 50-50. I prefer something that maybe gives me a little greater than 50-50. Like over here, this area, shorts should be more probable. Okay, I can't give it an exact number, but shorts are more likely here, not longs, right? And longs should be more likely here, not shorts. Okay, at the midpoint, anything goes. So we'll see how this plays out. Maybe we can get what can help along with this type of decision making is if the market can give us a little bit of structure in this area, which means, I'm not going to react to the first pin bar or inside bar that shows up because of that midpoint. I'd rather see like a little mini double bottom develop or something like that, some kind of structure in order for me to confirm that this thing is, really going to go somewhere significant off this area. Does that make sense? Otherwise, we're looking at test of low. All right. I may get a bearish continuation pattern in this area, right? We may get that. I don't know. But we're looking at test of low, which is very realistic based on the structure we just examined, or lower low, right? Now, that may not happen while we're watching this. That may take the whole day to develop. Okay. So let's keep that in mind. Now, with all that being said, let's now move to the 5-minute. Let's go to the perp chart here. BTC perp. Now, this is just because, you should get in the habit of doing this, which is based on the exchange that you use. All right, I'm just going to put Binance up. I have some old levels from the Binance chart, and we'll see now how this goes. Okay, so if you're using BitGet, if you're using whoever, Binance, that's whose chart you should use. Okay, this is the futures chart. So now we'll see where this thing goes, and we'll see if we have to make any other adjustments. But like I said, see the inside bar developing? Yes, we can argue old resistance, new support, but I don't like the location. This is not a bullish trend either. You could say, yes, it is. Look, higher low, higher high. That's not a bullish trend. This is just a corrective structure within a broader bearish trend. You have to see the bigger picture. It carries more weight. Okay, I emphasize that a lot in my training program. By the way, my training program is very simple, and it's set up to that. There's no fluff in it. Okay, a lot of these programs out there, they just load you with fluff, and they load you with a lot of things that you can basically learn for free. I mean, sure, you could learn the techniques that I show in my program for free. Of course you can, but the problem is, let me just give you an example. Like Elliott Wave, right? I have a section just about Elliott Wave, and I talk about how to use Elliott Wave in its most efficient way, okay, or the way that I found to be most efficient. If you go, okay, cool, I'll just learn Elliott Wave on my own. Okay, go ahead, have fun with that, because Elliott Wave is extremely complex and extremely subjective. And when you go around, looking around, trying to learn this, trying to learn that, it's nothing but a ball of confusion. You're going to be like, well, when should I start the count from? And should I, how much emphasis should I put on the corrective waves? And it's just a big ball of confusion. So you'll be there forever and you'll never get anywhere with it. My program is set up so that it gets you right to the point. Okay. I give you the most valuable information possible based on that topic, and then we move on to the next one. The idea is to give you basically a set of steps that you can rely on every time to give you efficient technical analysis. Now, technical analysis is not the answer to all of our problems, as we know. You do have to have a sense of context, and part of that comes from having a strong academic foundation. My program doesn't really go into detail on the academics. I'm looking to add a module. I should add a module to that, but right now I have an area in the server where Bill put a lot of great information. There's a nice resource of academic information in there, links to resources. It's a great place to start if you're a beginner. You're not going to make money with it, but it's going to help you build your perspective. Without perspective, you're just wasting your time. Okay, you're just basically gambling. Anyway, all right. Hey, Levant, how are you? From Turkey. Okay, cool. All right. Thanks for joining. Anyway, so that's the situation here with Bitcoin. Okay, so we have our 5-minute plan laid out. I'm more interested in shorts. This candle can turn into a continuation pattern, right? It's an inside bar. I'm not interested in longs at this location, and I'm not really excited about going short either. I just finished talking about that. Okay, so if I'm going to go short, I prefer to see something happen over there. If I'm going to go long, right, I want to see something happen at the support. That's the way I'm going to play this right now. This environment has been very tough to trade. So it's better to be more selective than it is to react. I'm not going to take a trade just to take a trade. That's not a good habit to be in. Okay, so there's our 5-minute close. That's also, we have 5 minutes before 10 o'clock. A lot of times at 10 o'clock, we'll get news often comes out at that time. I don't think we have any news today. But you can see a lot of movements around that time because there's often a catalyst. All right, so anyway, we're going to watch this thing. We're going to see how it goes. Now, while we're watching it, we're going to switch over here to the left-hand chart, and we're going to talk about the bigger picture, okay? Now, as far as Bitcoin goes, now we're going to switch our mentality to the swing trade mentality, all right? This is not the same as the day trade mentality. We have to treat this differently. Now, I talked about, if you read my TradingView article that I wrote the other day, I talked about the sell signal, right? That bearish pin bar. But again, same problem. This location is less than ideal. I talked about that as well. The broader structure, as we know, is bearish. So that's why I keep mentioning the 14K support area, how it's still possible that we can reach it. But this is a tough place to go short, okay? I told people, if you want to short this, you're on your own. I'm not even going to call it. I'm not even going to entertain the idea because this is 50-50. Anything can happen here. It may start out as a short. It may go a little bit your way. And next thing you know, it's squeezing to a new high. I prefer to short it here. I'm not going to short it, but if I'm going to call the short, I prefer to call the short here. Either the market gets there and provides that opportunity, or it does not. If it does not, then I have nothing to do. That's very simple. I trade rules. I don't trade feelings or ideas or opinions, okay, especially opinions. So that's the story with Bitcoin. There's nothing to do here, right? So leave it alone. If there's some kind of negative news that comes out, all right, this thing is in a position to test the low and break. So, but there's so many things that can go wrong in between. It's just the levels are just not attractive. So that's really all I could say about Bitcoin. 14K is still in play. The idea is still in play, but there's just, very little behind that right now, and it can easily go wrong. I prefer a level that has better probability and better reward risk. Okay, I'm watching this Bitcoin on the smaller time frame. Let's just jump back here for a minute. That is a buy signal that's in effect, but I'm not touching it. Okay, not touching it. I want to see how we behave in this area up in here. That's what I'm interested in. Okay, for a short. So, and again, I don't react to things. I have my plan, and now I wait for the market to align. All right, so back to the swing trade mentality. So that's Bitcoin, right? Let's take a look at our bond market here. Always check the bond market every day. Check the bond market. Here's a 10-year note futures. So look at this. All right, over these previous 2 days, we have an inside bar, right? That's a bullish reversal, and it took out the high. We have a buy signal in the bonds, which means rates are lowering, at least minimally, right? That's what that means right now. This is a higher low. If we make that higher high, now things may be getting interesting because look where we're coming from, right? We had this resistance level. The market tried to react to it, and it's being reversed. That's interesting. If this continues this way and we get a clear cut higher high, like if this thing eventually works its way up to something like that, that can be a change, a notable change, because now we will be compromising pretty much all the resistance levels that I was eyeing, that I was watching. If we're compromising them because we broke like the lower ones, All right, but that doesn't really constitute a trend change. If we clear this one and we start to prove trend change, then the next pullback I'll be expecting a higher low. Okay, and if that's the case, then that will be pointing to maybe the beginnings of a more stable market, like the beginnings of an actual bottom. I say beginnings because it can still gyrate around for a while, and the stock market may still show some weakness. But if the bonds can show a persistent turn and rates start coming off, that's going to eventually encourage the cheap money to come back in. So that's why I was saying on Monday, this time right now is a good time to start researching and putting your portfolio plan together for the bigger picture. Now is the time to start identifying the stocks, identifying the type of risks that you're interested in taking, how much money you want to invest, right? So like I'm going to put together, my plan is I'm going to put together a $10,000 portfolio. Okay, that's going to be the starting amount. And I'm going to break that up into high risk assets, right? It's going to be a speculative portfolio. And that portfolio should by no means be your full amount, right? So for example, if you have $100,000 to invest, this $10,000 portfolio should represent 10% of that, right? You're not going to put all $100,000 into this portfolio. That would not be a good idea. It's irresponsible. So $10,000 portfolio, and I'm going to pick speculative assets, right? And I'm doing my research now. In fact, I have a few names in mind now. I'm not going to share them here. That's for people that, that's for premium members. But over the next couple of weeks, I'm going to start sharing some more of that information. Because again, it's not like we're at the bottom and we need to be in a hurry here. This is the research phase. We want to identify the names. We want to figure out how our allocations are going to look. Like we're formulating the plan, and this plan will take place over the next 6 months or something like that. That's what I'm looking at, right? And the duration of that portfolio, you're looking at multi-year. That's the idea, to hold on to these things for a couple of years, because probably over the next year, we're likely to see a bottom develop. Okay, so I can't tell you when, but I think we're nearer that bottom, especially if the bonds signal that, and they may be starting to. Now, look, I am not one to pump false optimism into people. Trust me, I'm about being objective. As most of you know, who've been following me for a while, people call me pessimistic or negative. I'm realistic. So I'm looking now I'm starting to see, okay, this market wants to let off a little bit. Maybe the bear is starting to loosen its grip. Okay. And so this is the time, I think, to really start the research phase and start lightly positioning. Okay. So that's a project. I'm working on that with JP Trader. He's got a lot of great ideas, right? And I've been looking at a few of those, and we're going to start putting that together. So again, if you want to get in on that kind of stuff, become a member. All right. And stop, stop just dabbling. I get people, I'm not sure. Okay. Don't come to me when the market's at making new highs, in a year or whatever. Should I buy it now? I'm not going to even answer your question. Okay, so that's the bond market. All right, so it's interesting. It's starting to maybe change. We'll see how this thing looks over the next few days. Okay, let's move along here, and let me know if you have any questions about that. By the way, so let's talk about the euro. I'm going to jump around here, right? Maybe we'll jump back to the stock market. How am I doing with time? Not too bad. Let's talk about this euro, all right? Because I'm short this thing. I called another short, right? And that was at 104.70, and that became active yesterday. That trade was actually worth like 40 pips, but not going to put a break-even stop after 40 pips. Like I said, it needs to move 100 pips at least, or something like that, before you really should put the break-even stop. And we get this ridiculous candle. So that's another higher low, all right? And this, is this a bullish trend? Well, the structure is bullish, yes, but the general trend, as we know in the euro, is not. But maybe it's changing. I mean, look at this on the weekly chart. I mean, come on. This is like altcoin kind of movement right there. So there is likely to be a pullback, okay, over the next few weeks. But man, trying to stay in this thing is very hard, especially after you take 3 losses. If this is the 3rd loss in a row, it's not a loss yet, but is likely to turn into one. This thing can inch its way up to here. It's possible, 107. It can inch its way up to there before it turns. I'm not going to get caught in that. All right, so just keep that in mind with the euro. There's some perspective there. We should also, whenever you're talking about the euro, you should always keep an eye on the dollar index, right? Let's look at that. So the dollar index tried to come off of this support. Look at the support lines that I have drawn on this chart. Look at that, okay? I have a number of lines there. Let's look at the weekly chart. Look at this thing, right? The dollar is trying to put itself together there, and it's having a hard time. Like, it's just having a tough time. But if I was going to be looking for a position in the dollar, I mean, look at this thing. The dollar is not exactly bearish yet. All right, this could be the beginning of the bearish leg. That could be an initial move. It's very possible, but we need to see some kind of retracement, right, before we can start formulating any conclusions. This is not a time to say, oh, the dollar's bearish, because things don't move in a straight line. All right, this is likely to bounce. So that next bounce is going to be very telling. We have to see where it goes. I'm not expecting it to make a new high. If the dollar does make a new high, over that's going to take some time. I would be surprised, okay, if it actually made the new high, especially in light of how everyone's trying to, force this market into something positive and all this positive talk and all this other nonsense. If the dollar makes a new high, that would be a very bearish thing. But, at this point, I'm anticipating the lower high. So we'll see. I could be wrong. Only the market can answer that question. But the point is, right now, the dollar is still in a location where a rally is very likely. It just refuses to go. Okay, and that may have something to do with the holiday optimism and all that other garbage, that kind of thing. So we have to see how that goes. All right, so that's obviously the inversion of the euro right there. Let's take a look at the NASDAQ. Okay, so all that we talked about. People have been asking about the short on this thing, and the market came off of an area where we talked about that resistance. It came off, and now look, it went to this minor support, which I've been pointing out, and it's trying to find buying activity. Look at the pin bar. Now we have the whole day before that closes, but that can turn into a buy signal. Okay, and in an area where people are itching for optimism. People like to be optimistic. People like to be lied to. They don't want to hear about reality. Okay, they want to hear bullish, bullish, bullish. Okay, no problem. But the thing is that can cause, another buying attempt here, and you may get another test of high, right? This thing may just gyrate like it's been doing. This is basically a pretty narrow range, right? And it may gyrate and test one more high before the optimism runs out. Okay. Now going into the first quarter, usually of the new year, all eyes usually go to the highly speculative stocks, the Russell 2000. If the Russell 2000 stinks, right, and they call it the January effect. If the Russell 2000 can't get its act together, which it's not likely to, but you never know, then usually that's like a bearish sign for the year. We have to see how that goes. Okay, that's not like a thing you can trade on. It's just like a phenomenon or whatever you want to call that, a behavior, a seasonality type of thing. We have to see how that goes. But if we see a bearish first quarter, that may start after this thing rallies one more time. We have to see. Again, I'm not giving you specific forecasting here. No one knows the future. Anyone that pretends to know, they're lying to you, as you know, or they're just looking for attention or whatever, right? No one knows. Just like no one saw the activity that we saw back in February, right? When the market had all those problems and we had the geopolitical, blah, 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 all that stuff. No one saw that coming back in December. Everyone was too busy, drunk off their new highs after new highs after new highs. And they were all forecasting that the market was just going to have the best year ever and blah, 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 blah. Okay? Never listen to people. Never listen to people, especially in the mainstream news, especially. If you still watch mainstream news and you feel that you're being informed, you're just fooling yourself. Okay? They're not there to help you. Let me tell you that. Anyway, so that's the situation with the NASDAQ. This type of activity is good for day trade, day trade strategies, because that can lead to like some kind of reversal. The Nasdaq can jump a couple of 100 points. Like that's within reason for day trades. But for swing trades, there's really not a whole lot to do here. Okay. Speaking of that, let's take a quick look at Verve. Verve is a swing trade I called. I sent this out the other day as well. Notice this swing trade, the setup is there, but the trade is not in play. Okay, so that's one of the advantages to using the entry techniques that I use, because if you had bought into this thinking, well, everything is there, I'm just going to buy into it because I don't want to miss it. Well, now you're stuck in this thing and it's not doing anything. So that's cool. Hey, the setup is still there. We'll leave that alone if anyone's interested in that. And that's that. Okay, so let's do this. We now have, what time is it? We have 1 minute. This may turn into a trade here. So I'm going to put the Nasdaq back on the larger time frame, and we're going to switch this to a 5-minute Nasdaq because I want to see the correlation. Okay, I want to see what the correlation tells me between these two markets, because there is a relationship here. All right, now we have the close. That's a sell signal. I'm going to take this short. Okay, I want to do 2 contracts. Oh, it's the wrong button. Hold on. I want to sell it. Okay, again, this is on paper. Okay, so I sold it. Oh, I sold the wrong market. Oh, man. Go on. I sold the NASDAQ. I want to sell Bitcoin. Oh, you guys are front running me. No, I'm joking. There must be news. Okay, do I have 2 Bitcoins on? Yeah, okay. Let me get rid of this NASDAQ because I don't want to be short that. Buy these back. Okay, that was a mistake. Anyway, this is on paper. Okay, so I took that short. Now we'll see how that thing goes. Now I took 2 contracts because I want to see if I can demonstrate how to manage a runner. Okay, clearly that's news. That kind of reaction is some kind of news. I don't know what the news is. I don't care. You don't see me. You don't see me acting like that, do you? I mean, yeah, it's on paper, but the thing is, I don't care why. Why doesn't matter. What matters is, we got the rejection right off this area where I was looking for a rejection. It tapped the border of the area. Okay, I mean, it would have been nicer if it made it a little further, but it tapped the border. Okay, fine. We got the signal. I even bought it at I got into this thing at not the best price. The actual price to get in was 16,831, right? That was the actual entry. That should have been the entry. I got 16,819. So I got it 10 points worse than where I should have gotten it. Okay, but that's called slippage. That's going to happen. I wasn't fast enough to get into that thing. And also, as a day trader, there was no time for me to place those orders in advance. That 5-minute closed and we broke that low. There was I couldn't sit there and fumble around. Let me place the stop order. There's no time for that. So you have to get used to using market orders and stuff as a day trader. Okay. So let's talk about the risk, because I wasn't even able to place that order either. How much risk do I have on this thing? So the stop would have to go at 16,848. So we're looking at 850. All right, I think 850 is reasonable. So that's about 30 points of risk. That's not bad for a day trade on Bitcoin. So 30 points of risk. So here's what I would do in that situation. You would basically go, I'm using the paper trade thing here on TradingView. I'm looking to change this platform so that we can just see things in a more realistic light. But basically you would do this. Let me move this. You would go and you would alter the orders, right? You'd go here and you would just alter this, and you can put the stop loss. Okay, putting it here, and the stop loss, right? I would want to assign it by price. Okay, and the price would be 850. So you just type in 850. Okay, and I'm sorry, I got the wrong number in there. 16,850. You know what? I'm going to give it a little extra, 855, just to give it a little room, because you know how these things are, right? So that's basically 70 points or whatever, 353 ticks, whatever, right? But that's where I'm putting it. So the stop is there. right? Now, if this went from positive to negative on me, it turned really quick. We'll see how, we'll see how it goes. Again, that's the whole point here of why you should do this on paper, because you have to get used to these behaviors. Now, notice I have the NASDAQ up here, right? Look at the NASDAQ, right? Do these candles look identical? You have to look at that relationship, okay? Bitcoin follows the stock market. So if the stock market turns around here and does something positive, then this is going to follow it. How is this useful? Well, the stock market can give us some cues, some advance notice on things, right? And that can at least help us perhaps avoid taking certain trades. Like, for example, if the NASDAQ, like when we saw this bearish candle developing on Bitcoin, and the NASDAQ had no bearish candle, and the NASDAQ was just continuing higher, I probably shouldn't take that short, okay? Or something like that. So we'll see. It's good to watch the correlation, but I don't take trades on it, all right? Because the correlation is not 1-to-1. Okay, hey Glenn, how are you? Thanks for joining. All right, so we're gonna watch this thing. Oh, I'm over 30 minutes. Oh man. All right, so a couple more minutes. I got to wrap this up. I can't have these long streams here. So this trade is in play now. Again, it's on paper. I highly suggest doing this on paper because these can turn into losses. Okay, and markets are highly random. So please keep that in mind. I'm just demonstrating the mentality here and the thought process. So now, the target on something like this, we're risking basically, what would we say, 30 points? Was it, right? I'm short from 19 and I put the stop at 55. So it's a little more than that, right? It's like 35 points. So that means the minimum target should be 35 points. That's the minimum target. Where is 35 points? From, let's see, 19, that would put me at, that would put me at like 85, 785. So let's just highlight that on the chart here. In fact, this blue line on the bottom, this is 780. So 785 is going to be just right on top of that, right? 785 is going to be like right there. So that's your minimum target right here. And I don't know, it doesn't look so good right now. And the NASDAQ is trying to rally. Look, the NASDAQ gave us that bearish candle and it turned into a bullish pin bar. Not exactly what I want to see, but let's see what happens here. I'll give it let's just give it a minute. How much time do we have? This candle just opened. So we have to see how that 5-minute candle closes. But this is now a bullish pin bar. And now the thing with this bullish pin bar, it's not like in an ideal location. So I'm not going to sit there and like reverse or anything like that. You don't want to flip. All right, now if this thing goes way up here to the stop, looks like it's going for it. Oh man, we're at 43 right now. Well, we have to see how it closes. If this thing closes strong, I'll have to get out. If I'm not stopped out yet, I'm gonna have to get out. But again, that's the importance of using a stop. If this market fakes everyone out and does something stupid and rallies, you don't want to get caught in that, okay? Especially with 2 contracts, you don't want to get caught. So we want to see how this 5-minute candle closes. Does it close red? Does it close green? If this thing closes red, then that would be a good sign that this thing is probably going to work its way lower, okay, if it gives it back. Because what happens here is people, they get faked out. You get a bunch of people on the wrong side, right? All the longs pile in. They're wrong, right? They happen to be wrong, and then they all have to pile out. It's just a mess, right? I mean, look at the NASDAQ. NASDAQ looks like it's the lead here, okay? Getting the bearish pin bar here. I wonder what news that was. I'm cutting you some time. Okay, cool, Bill. Thanks. I need that. So no, but I have to have this trade. I'm not gonna sit here for the whole hour. I'm not gonna obviously be able to sit here for the entire duration of this trade. So at least I want to give you the instructions on what to expect. I mean, we put the trade on. We'll see. We'll check back tomorrow and look at the outcome and see, was this a positive or negative trade? Because sometimes this trade may take an hour before it gets to minimum target. If it blows through that, the thing is, if it gets to the target, this is what I want to say, and that's why I haven't programmed it into the thing yet. I programmed the stop is in the system, right? But the target is not, because I want to see, I have 2 contracts on. The idea is minimum target. If it starts to hesitate there at the minimum target, definitely cover 1, okay? If it blows through and with no hesitation, it just blows through, then you hold on, right? You hold on to both of them. As soon as the market gives you a hard time, you get out of one. And then the second one, you can move your stop to break even for that, which means now you have a risk-free trade. Either it goes back to break even, which means you lock in the profit from the first one. And now that's the second one, yeah, you give the profit back, but the trade is still green. Either that, or it gives you a conflicting signal, right? And you get out on that and just take whatever you can. The idea of the runner is you're giving the market a chance to pay you more if it wants to pay you more. Okay? There's no way to know if it will. You're giving the market the chance. Okay? Understand that? So you can't sit there and say, "Oh yeah, I need to maximize." If you're thinking still like that, you will fail. And I can almost guarantee that. You cannot think that way. You have to think as a follower. The market is the leader. You follow. What you think does not matter. Okay? Well, I think it's going to go to, this thing's weak. It's going to go all the way to 16 even. Doesn't matter what you think. The market's going to do what it wants to do. Respect the market. You are a follower. We are followers. Our opinions, our thoughts are meaningless. Okay, we got our 5-minute close. That's the kind of close I want to see. Okay, that's a nice, it faked everyone out. It started out green. It looked like it was going to go to the stop. Good thing I'm not reacting on my feelings, right? Because I was like, oh man, I'm going to have to get out of this. That was my thought. I even said it, right? And then I said we should wait for it to close. I'm not acting on my feelings. I still have the feelings, but I know better. Okay, markets are random, so it sucked them all in, and now they're gonna get banged out. Okay, that's typically what happens. That's the reactive crowd, the herd, the mindless people who have no idea what they're doing. This is what happens to them. And that's why, that's who we capitalize on. These aren't market makers or bankers or all these other conspiracy theory enemies that, oh, the bankers are our enemies. No, they're just making money on our fees, right? That's all they care about. And then they want to go play golf. So anyway, so this trade went back into the green. So I'm going to wrap this thing up, Bill. I'm turning this thing off now. I'm just letting you guys know. I gave you the minimum target. I gave you the instructions on how to manage it through the target, and we have the stop in place. So you're on your own with this paper trade now, okay? And tomorrow we'll revisit the outcome, and we'll review, how the market played out and what management techniques were appropriate. Okay. Now, meanwhile, I just want to point this. Look at the Nasdaq. The Nasdaq is not selling off like Bitcoin is, which is interesting, right? So there's some conflict there. We'll see. So it's an interesting thing to watch. Watch the relationship. Okay. Anyway, so you guys, hey, thank you again so much for watching. I hope you got something out of this stream. If you'd like to know more about my techniques, again, my training focuses on swing trades, not day trades, but the ideas come from that. Okay. Check out the links in the description. If you have any questions, you know where to find me. Reach out, and I'll be happy to answer your questions. Okay. So enjoy your rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.